All right, so in the crypto world, it feels like a new exchange pops up, every other week? But today, we're diving into one called BitcoinTry, and they're making some pretty bold claims about a new quote unquote hybrid approach. So let's break down their promotional material and see what's really going on here. Yeah, I mean, in a sea of crypto exchanges, you've got to ask the big question, right? What makes this one different? So as we go through their materials, that's exactly what we're going to try to figure out. Okay, so to figure that out, we're going to walk through this kind of like a potential user would. We'll start with their big idea, this whole hybrid exchange thing. Then we'll see how they're tackling that age-old battle between security and just, making things easy to use. After that, we'll hit something every trader cares about, the fees. We'll also check out what else you can do besides just trading, and we'll wrap up with, honestly, the most important part, the fine print. So Bitcoin Try's entire brand, their whole identity, really hinges on this one concept, a hybrid approach. They're trying to, thread the needle here. They're promising the freedom you get with DeFi, but with the safety and structure of a centralized platform. So what does that actually mean in practice? Let's find out. And this right here, this gets to the heart of a classic crypto dilemma. For a long time, you kind of had to choose, right? Do you want that total control and freedom of DeFi, or do you want the more user-friendly safety net that a big centralized exchange offers? Well, Bitcoin Try is basically coming out and saying their hybrid model means you don't have to pick a side anymore. So wait a second, how can one platform be both decentralized and centralized? I mean, that sounds like a contradiction, right? Let's really dig into the mechanics here and see how they claim to actually pull this off. Okay, so this is the core of their hybrid system. On one hand, if you're just doing routine stuff with your own pre-linked Web3 wallet, deposits, withdrawals, it's totally frictionless, super easy. But the moment you try to send funds to a new address, bam, the centralized security measures kick in. We're talking mandatory KYC, that's know your customer verification, and two-factor authentication. It's actually a pretty clever way to apply that heavy security only when the risk goes up. And really, the key to this whole system is the Web3 wallet. Now, unlike an account on a normal exchange, a Web3 wallet is what we call self-custody. All that means is you, and only you, control the private keys to your crypto. You're in charge. And that's exactly what makes the hassle-free side of their model possible. All right, so that's their whole security angle. But for most traders, the very next question is always about the cost, right? It's all about the bottom line. So let's take a look at how Bitcoin Trade structures its fees. So they start with a standard trading fee of 0.2%. Now, just to give you some context, that's actually pretty competitive in today's market. It's not the cheapest, not the most expensive, kind of sits right there in the middle of the pack. A really straightforward starting point. But here's the thing, their main selling point isn't that base rate. It's this. They're promising to slash those fees in half, a 50% reduction. Okay, so what's the catch? Well, the discount is tied directly to their native token, which is called BTTY. According to their documents, if you hold and use the BTTY token on the platform, boom, your fees get cut in half. And you see this a lot, right? It's a pretty common strategy. It gets people trading more, and it also creates demand for their own token, which pulls you deeper into their whole ecosystem. But it looks like Bitcoin Try doesn't want to be just a place to trade. They're also pushing features that let you earn some passive income and actually get involved with their community. And one of the biggest features here is staking. Now, if you're not familiar, put simply, it's where you lock up your crypto for a certain amount of time to help support the network. And for doing that, you earn rewards. Honestly, the easiest way to think about it is like earning interest in a savings account. Now, their staking program is, you guessed it, focused on that BTYT token. They've got a flexible option that gets you 4% APY, that's annual percentage yield. But if you're willing to lock up your tokens for a full 365 days, that reward jumps all the way up to 20%. It's that classic risk-reward trade-off. The more you commit, the higher the potential return. And hey, it's not all just about the nitty-gritty finance stuff. They're also promoting a couple of perks for the user experience. First up, direct human support on Telegram, which, let's be honest, is a huge and welcome change from fighting with chatbots all day. And second, they're planning to run regular trading competitions to actually reward their most active and skilled users. Okay, so we've seen all the promises, right? The hybrid security, the lower fees, the staking rewards. It all sounds pretty good. But with any financial product, The most important part is usually buried in the fine print. So let's take a serious look at the risks. And their legal disclaimer really does not mince words. It states very clearly, all investments and investment strategies involve risk, including the risk of loss, and may not be suitable for everyone. I mean, that's a pretty standard warning, but it is absolutely critical to hear. The disclaimer goes even further. It says the platform is really aimed at experienced investors, and that those investors should consult their own financial advisors. And here's the kicker. It states that the company is not liable for any losses you might incur. This is absolutely essential context for anyone even thinking about using a service like this. So, after all that, what have we seen? Well, BitTry is trying to package that DeFi freedom with CeFi security. They're using their own token to make trading cheaper, and they're adding staking to let you earn passive income. But the big question this leaves us with, it's not really just about this one platform. It's about the entire industry. Is this best of both worlds approach really the future of crypto exchanges, or is it a compromise that, in the end, doesn't really satisfy anyone? I guess only time will tell.